Good afternoon. This is Chris Brecher with Brecher Trading. Today is Saturday, December 23rd. On the site coming out in the next couple of weeks, we're going to have a swing trade video every Saturday, Friday night or Saturday, where I'll go over more long-term trades. The idea is most people think of me as just a day trader, and I'm not. I'm pretty good about longer-term trends. I did tell everybody I thought Bitcoin would go over gold this year. I didn't think it would get over it that much, but that was the trend I was seeing in here. But today we're going to talk about watching the basic material stocks. Now, one thing I want you to realize is I'm putting this on YouTube, this swing trade video, but in 2 weeks, these are going to be for premium subscribers only. So this is just a taste of the kind of things you're going to be getting on the site. Give you an idea, here's the site. I made it intentionally blurry because we're editing all this in here, and I want it perfect in here. Membership levels at the bottom are going to be basic and premium. They're not going to be silver and gold. It'll probably be basic, premium, little green, darker green. Just mention money. Maybe that's subliminal that to have a green and dark green. And you'll have up here, why choose Brecher. You only have 2 buttons, make it easy for everyone like me. And also, it's only going to be one-page descriptions, what you get, membership. Boom, that's it. And then you either log in or subscribe. Now, I'm pretty excited on how elegant it's coming out in here, and we'll have that out soon. In there, in fact, a lot of people have asked. I post charts every morning. That's for premium and basic. The only thing different between premium and basic is going to be the chat room, where I'm on at least 2 hours a day showing live trading, teaching, and so on. The idea, though, is morning ideas. I'm going to be posting anywhere from 6 to 12 charts. Chart ideas. I do index, futures. I'll do small stocks, big stocks. You name it, I'll do it. But you'll get ideas. I'm an idea generator. In here is going to be the forum, which to me is going to be pretty active. I have not been doing margaritas and before I got on. Right now, it's about 5:30 in the afternoon on Saturday. I promise it's no margaritas that I'm drawing so poorly. There's a lag on the Zoom that I'm using, so I apologize. But the idea is forum is where it will be active, where people can ask me questions, market-related, and people can ask each other questions. Very active. I really like an active forum. Videos are going to be like today, swing trade video once a week, nightly videos 5 times a week. Learning Center is going to be what you like on my kind of site. ATR trailing stop, MACD, how to use StockTwits sentiment table, and so on. I'm going to have all those included anywhere from 5 to 20-minute videos, all free with your subscription. So it's pretty exciting when you have that on there. So very excited about that and looking forward to that. And special events, as you see over here on the right, special events, it's going to be things like a Wednesday night chat for everyone. So the basic subscribers and premium that work all day can't be on the chat but still want to hear the chat at times. Special events, you'll be able to ask me anything. We'll have those on Wednesday night, maybe Saturday mornings. Well, I'm also going to have some special guest speakers on here, and I'll be announcing in that area. So what I wanted to go over today was the basic material stocks. You might be, why on earth do you want to mention the basic material stocks? Because when you see the speculation like you see in Bitcoin, there's a lot of money sloshing around in the system. That's number one. Number two, we have a tax cut that is potentially inflationary. I'm not saying it's going to be. I'm just saying we already have a strong economy, relatively strong. I know wage growth is subdued, but relatively strong as measured by GDP and the overall unemployment rate. The idea is you do a tax cut, you're throwing fuel on a fire, so to speak. But before you take my word for it, before you take my word whatsoever, I want to go to an interesting site. This is called Trading Economics. Why do I show you this? It's a fascinating site. See this? Has GDP of all these places, has 8 million things in here that you could look at. But what I want you to see was this. Anybody that tells you there's no inflation, they're measuring labor costs. They're not measuring what's going on under the surface. Crude oil, we already know, is rallying, and that's easy. You can find that in 8 million places. You can see that's a big old uptrend in here in the last 2 years. But this is what I find fascinating. Forget about metals. We'll go over that later. Agricultural, we'll go over later or at another time. But I want you to go all the way to the bottom. The industrial metals. Why is this so important? To me, this is the meat of telling you what the economy is doing worldwide. Most people talk about Dr. Copper, and I know copper's rallied, but I want you to see some of the rallies in some of these others. Here's copper. Big old rally in the last year. I mean, last year, what am I talking about? Look what this is. This is from December. $2.93 to $3.24, 10% move in copper. That's pretty impressive. Go and put on here. I like to put in a daily. That gives you perspective. It was $2 when the election happened. You don't think people thought that Trump was going to goose the economy? Well, copper definitely did, and they were probably right. Is whether if it was timing, whether it was the election, it happened. But I want you to see a lot of things in here. Steel. Look at that trend. We're going to now go to some interesting ones. Bitumen is coal. I hope I'm not wrong on here. But you could go one to the other. Let's go into lead. Look how that's been up. You can't really tell. That's more spot prices in here. And then you go into other things. Aluminum. Look at that aluminum chart. I mean, I'm sorry, but if Janet Yellen's out there, hey, Janet, I know you're looking at labor costs, but are you looking at input costs for companies? I know it's going to happen where companies are going to have to start raising their prices because their margins are going to get squeezed. You have on the one side, if labor costs start to go up and margins get squeezed from input costs, companies are going to have to raise wages, and that leads to inflation because margin compression will hurt the stock market, no doubt about it. Think of it this way. If labor costs were going up right now while the economy was surging, the margins would squeeze, not widen. Right now, companies don't have the incentive to have to raise wages because there's a lack of urgency to do so, and that helps the bottom line, and that's why the S&P is at an all-time high. And why it keeps having all-time highs is because that margin is so wide. But you start to see the aluminum, you start to see steel, copper, all these input costs going up. It could lead to a big problem in here. It could lead to the Fed tightening more than you expect. Let's take some more. Iron ore. Now, iron ore has not been a big old uptrend all year, but it's had a nice pop, almost $20 since October. All I'm saying is there's a lot of stuff going on under the surface that's inflationary. Why am I bringing this up today? How the heck does this help you? Well, one is it could be bearish for the market in the long term, and it could be bearish for bonds because bonds hate inflation. But that's not what I want to go over today. What I want to go over is the basic material stocks, because I've been trying to go over ideas all for days and days for you of what stocks look like a swing trade. And the problem is I keep going over and over, and the oil stocks still look good. I know a lot of people say, oh, oil can't keep going up. All I know is the oil stocks look pretty darn good. And once I thought of that, I'm like, well, how about more material stocks? Well, here's crude oil. We already saw the chart of steel. Look what U.S. Steel's done. Go and look at even the second tier like AK Steel loaded with debt has had a heck of a run the end of the year. Remember, this is also one of those tax loss selling that all of a sudden people sold and need to buy back 30 days from now if they still liked it. And it's had a big goose at the end of the year in here. What's the second tier? Aluminum stocks. Look at CENX. I just posted this at 1590 that I was bullish on it. It's 18 in a week. So it's filtering down to these. So what I thought I'd show you is a number of stocks that could still go up that are in the basic material side. You have to understand something, though. it all comes down to the biggies. So what do I mean by the biggies? What I mean by that is the stock, if the high price stocks are not surging, then the low price stocks aren't going to surge. So just keep that in mind in here. But the way I look at it is look at COP. Let's look at some of the oil stocks. Look what these stocks have done. COP. Exxon having a nice move in here. Even Parker PXD having a big old move. Look at that beautiful chart. I wish I would have done a swing trade video last week. Look at this inverse head and shoulders. This isn't the only stock having a Stewie pattern. If you're new in here, a lot of times in my past, when I would highlight an inverse head and shoulders, it looked like Stewie from Family Guy. But look at that inverse head and shoulders in here. There are a ton of oil stocks that have that. Moral of the story, if there are a lot of oil stocks that have that kind of chart pattern, that means to me that oil is going to continue to go up. They don't have topping patterns whatsoever. So just keep that in mind in here. And let me show you a bunch of them. But the idea is you want the APAs, the APCs, the PXDs to be rallying before you look at the second tier. If they're getting blasted, you're not going to see the cheapies going up. So let me give you some ideas, some of them I'm looking at. One, Apache. Now this had lousy earnings, went straight down reacting to the earnings, but that's forming a nice little wedge pattern in here. Let me give you a couple more that are a little more high priced in here. CRR, and let me show you why I like CRR. It's actually a lower price stock. When I look at the stocks between 10 and 30, those are the ones I call lower price or under 30. You could go for cheaper. I usually don't. This is what I want you to see. If you bought here, you know where to stop yourself. When you trade longer term, you have to understand that you're going to lose money with stops on some of these. But on the other hand, it averts disaster. Now, if you want to buy this once it breaks here, by all means, I understand buying it at 10.5 and not here. All I'm saying is this at least has a beautiful backstop in this area right there. Has a nice little backstop in this area. If that's too much of a dollar is just too much to risk at 10%, then go in here and just put it on this kind of chart. Right here. On the upper right sextant here. And say, you know, if this gets to here, I'm going to buy it. If it gets to 1020, I'm going to buy it. In fact, this is going to be one of my learning videos about how to wiggle. What does that mean? That if you buy it here, and then it gets back under it, and you have to get out, and then it gets back above it, don't be afraid to get back in. Don't have a big ego about these things. Some of these things move 40%. What difference is it if you have to get in and out once or twice? So keep that in mind. So let me give you a couple more in here. DNOW. Is this acted poorly? Absolutely. How's it look, though, on an hourly? A completely different animal. Here's another one. If this breaks right here, 1123, there's no resistance till at least 12. And if it gets over 12, which is this prior decline, it could go all the way to 14. That could be a nice move in there. Look at the 15-minute. This is the danger. You don't have to buy it yet. That's why I said if it gets over here. A lot of algorithms, all they are is they're saying, if it makes a new high, I'm going to buy it. You don't believe me? Look right here. Look at the second it broke right there. It had that pop from 1080 to 1120. It's only 40 cents, but it's 40 cents in about 2 hours. There are algorithms looking at that kind of stuff. Did this one work? Went to a new high. Boom. Got stopped out. You lost 5 cents. Big deal. That's what I mean. You have to wiggle at times, and don't be afraid to put your toes in the water and have tight stops. Just keep that in mind. So let me give you a bunch more in here. FET. This one looks interesting. Do you see the head and shoulders? There's a Stewie pattern for you right there. This breaks here. The only problem with this stock that I see is that if it breaks here, it still has some stuff in here it has to get over, but it could grind its way to 17.5. So I'm definitely watching these. And the beauty is, take a 15-minute chart. If you want to buy when it breaks 15.13, maybe up to 15.20, just stop yourself at 15. Just say you're wrong. And then if it gets to 15.20, get back in. That's the way I play stocks that have a constructive pattern. Sometimes I get in too early. So keep that in mind. So let me give you some more in here. BAS. Now, these aren't all oil stocks. These are material stocks, but so many of them have this type of pattern. BAS. Whiting Petroleum. Real dog that's been a dog, and everybody I know wanted to buy it here. The key was the first time it broke the ATR trailing stop, at least it had formed a bottom by then. You might be like, well, how about back here? It didn't have the same structure back here. Just didn't have the same structure. This has been a lot more of like a cup and handle sort of situation. That could be really interesting because if that breaks, there's no resistance till up here. That to me is one of the best risk rewards on the board here. Let me give you a couple more I'm watching in here. KLDX. Now this is a dog stock, a $2 stock, but at least it's constructive on a short-term chart. If it gets over right here, you could see it clear as day, 255. This easily could get up to 3. I mean, that's 50 cents, that's 20%. So, and plus, you can put in a tight stop. I love being able to put in tight stops. Let me give you a couple more, then I'll let you go. CLD, Cloud Peak Energy. What a dog stock. I wasn't even going to put this in here, but the chart looks so good. Why do I like this type of chart? Because if you buy it here, you know where to stop yourself. You got a $4. You can see it broke out at 420. If it gets under here, you stop yourself. Probably a 15-cent stop to make $1. That's an amazing risk reward. So I hope you've liked this video. Like I said, these are going to be for the premium subscribers. I mean, for any subscribers of my site, basic and premium. The only difference in the site, the premium is going to get the chat. So I hope you've liked this video. Thanks so much for listening, and I'll talk to you soon.